All right, guys, time for a little recap on the market day. Let's check it out. So we had some really key levels today hit. So in the morning, let's start at the 30-30 here. We got some force up here and some traction. Remember, the end-all, be-all target's 430. Even I said today it probably wasn't going to happen. Didn't expect the force up here, but we had our over-under levels that told us the story. And we are predictive and reactive off of those levels and those levels alone. So I posted right here, we have a mega over under level, 426.84 on our video here. That is a monstrous of a number. I was searching for the short target of 425.91. Okay, we talked about that in the pre-market, talked about the early flush. So my entire team caught this beautiful little 11 pointer out of the gate. So I can go to this in our Discord, and this is what that looked like. So right here, we're getting short pre-market, short. End up at MES. I think I got like 25 MES, something like that. At 800 here and 400 something pre-market and overnight. So not bad, 1,300 bucks today. But this guy right here, 426.84, became an early resistance point, right? You notice the topping action here. Got the little squeeze from data, pushed up, came back down, snapped up again, lower high. You notice all of that magnet is what I call them. So if you guys don't remember, just a quick recap, the Friday jobs Fibonacci. This is the high-low on the 5-minute right here in pre. It happened at 7:30 in the morning Central. That Fibonacci construct would go all the way up that same day, and it would utilize the 2618. And here's how the market reacted to that 2618 throughout the week. Now, once we go under that 2618 right here, and we lose it, high probability chance we retrace to the 1618, okay? So the Fibonacci that had played out to the upside from the 38 to 50 golden pocket, pushed over the 100, hit the 1618, 2618. Now, when that 2618 becomes resistance, after it has achieved a long target, you will see a turnaround a lot of the time, and you will not go any higher until you magnet down and backtest the 1618 as confirmation, okay? So throughout the last 3 trading days, I did not see a tag of our 1618. Shy, no tag, shy, no tag, shy, no tag, right? So today, I was very adamant, noticing the lower high in pre-market, noticing it getting stuck under our gold level here of 426.84. So I said, that'll be the magnet day. So we all went short pre and grabbed a bunch of futes here, down and out here. Then I said, if you missed the short, make sure to grab the long at the 1618, okay? This purple level right here, 425.91. That's what we told the crew. Well, we had a big turnaround there. Now that over-under level right here became a swap, right? So we came down, hit our short target, AKA long entry, push back up, and immediately you're going to look to your left, and you're going to notice that 3820, right? Because this is the golden pocket of all Fibonacci, 3820 to 50. So you see it dip into the golden pocket of support again right here, and this is its lowest point. It never hit that pocket. Look at the last 3 trade days, never this low, right? It actually finally tagged the 3820. Missed it here, big miss here, miss here. We rode the 50 Fibonacci on the gap up candle, sure, but we needed a full tag of the bottom channel 3820, and we got that as well. Now, luckily, because we use multiple Fibonacci overlays, those 2 key levels were together. The 1618 target and the 3820 target. So if we drew a box in between those, we have mass support at a technical level between 2 different Fibonacci's coming at the same area. Okay. So with that being said, we had a beautiful push, and our over under called. It is over this squeeze, under it, fail. It became support, 426.84. Snapped up over it, got to the 78.60 fib, and just had this beautiful just chop, and it was like, nope, no way, this thing's going to squeeze out. So squeeze to the next, power squeeze to the next, fell back down, ended up finally catching some intraday. Now, 430 was still missed, and that's still the target, right? Here, because we're still waiting for 430 before anything. That will complete the 3820 fib in the long scale of the daily chart. Now, if you guys don't remember that one, go to your daily, and you should have, well, actually, let's weekly it so you can get a little cleaner there. You should have, everybody should have, every Fibonacci trader in the world should have. This is the most basic one. Bottoms of the last couple of years, 2 years, year and a half, and tops. So your all-time high and your last year's low. That is the Fibonacci. So if it holds the 100% fib, where do we go? Back to the 3820. So the second it was above the 7860, this was our long call, rising wedge, all the way to potential 450. We were calling that months ago. Now, our 3820 is coming up. That is our magnet. We got to magnet it. And you can see right there, she is just on it, right? Just barely missed it. We have the standard deviation center as resistance on the 3-year weekly still. Now, we don't use that too much, but it is still there, and it is a weekly level, which should never be ignored. Now, for the final thoughts here, we'll go to 30. And this is another one of those interesting force ups where you noticeably seen, here's that Friday force up, right? And we noticeably seen a dip beyond the 200. So here's the 200 SMA at 30.30. You see some clicks below that, and then it just retrace squeezed hard. Now, usually we call these loops, the moving averages. Not just because something tags a moving average doesn't mean it has to be just the perfect tag and it goes one way, or perfect rejection, support, doesn't matter what it is. It's not going to be that perfect. So when you get around a moving average, right? Like, oh, we're near the 200, without absolute confirmation, we can still get opposite moves, especially at these FOMO highs. And I keep telling my whole crew to be very careful at shorting these, because the FOMO and ridiculous idiocracy that is the buy FOMO longs are not to be messed with. Play with the grain right there. You don't want to play against that grain. So when that came up right here, the 200 SMA 30.30, that became a squeeze point, same as my gold level right here of 426.84. Now, those matched up obviously perfectly with some Fibonacci, and you'll see some bearish entity here, like the cross right here, the 50 of the 100 is looking for the downside, squeezed anyway. Same thing that happened on a force up day. We usually get a little bit of manipulation. That's fine. All you got to do is look for the manipulation and play for it. Doesn't mean it's unplayable. It just means it's moving against what it should be or could be doing. So back here on the Friday squeeze up again, 50 cross right here, red dash line through the 100 EMA. So your moving averages are crossed to the downside, hit the 10 SMA daily, which is this guy right here. It's a daily representation. Came down to my Fibby, and this is why Fibs rock right here. Boom, to the T, and did a force squeeze. Now, the moving averages weren't set up for that play, but we had mega price levels on the weekly Fibonacci to play there. So there was most definitely something to watch. So same here. So we had the golden pocket hit today at the bottom, 38.20, with my short target that has been the short target for the last couple of days we're looking for. And once that short target was hit, that becomes long entry. Now we squeeze back up to the weekly, and we are looking like we are going to do something similar to the 415. If you do not remember the 415 gap and how it manipulated the consolidation, here's 415. This blue light channel is the gap. Now look at the price action here on the 30.30. The blue left the gap down here at 415. Oh, there's one down here. It's right here. Solid blue level right there. Now this 415, here's the gap down. Now what did it do? Price action came back up, shied it, no tag. Down, down, standard deviation -1 on the 30.30. Plowed back up, shied it, no chance. Consolidation, big squeeze, still no fill right there. Shied it, back down, and attempt, and attempt, and attempt. And that was the whole week. It was just that drug out shy. And the market loves to tantalize you with those perfect level hits. That's why it's a really good idea to get out of your target, long or short, a little ahead of time. Let's say you're looking for a gap fill here at 415 and you see it touch into the gap, just get out. It's like 3 to 4 points on futures. Why are you risking a beautiful, 20 point up move to hold on to potentially a 7-8 point mistake at the top, giving away your profits, giving it back to the market instead of just getting out a little ahead of time, or at least scaling out of your position? If you believe it's going to fill and push, make sure you're like 80-90% out. And if you want to leave a little bit on, great. If not, just take those profits. The market's not nice. So similar to this, our 430 target, you see the push right here. No 430 target. 430 is that 38.20 we just talked about on the big scale fib, okay? So again, shied it, no chance, shied it, and again today, shied it. It's the same similarities the market loves to manipulate your psychology with. So what does that leave us with? Well, two options are going to have here. We're going to get one of those gnarly just push-ups again, like a squeeze. It's going to back test that 430 and go, which I'm least likely that. And then our extensions are 431 30s, 431.44, and that would be it. But I don't see it, again, I just don't see it until Powell or some other catalyst really pushing to it. So if you were waiting for that 430 tag, this might be a sell the news Friday or sell off Friday, where let's say we relax, we come back down, we pay attention to our levels again. We have 428, which was, check our other videos, monster level from the last couple prediction videos. If 428 holds, it pushes up, maybe we get the 430. Now from there, it either squeezes out, and we have to look at the intraday technicals when we reach 430, or it will backtest and do a hard sell leading into next week's Powell, and so on and so forth. Now, that 38.20 is going to be the key factor. 429.86 are pretty much 430. That's going to be the biggest of the big. We shied it very close, shied it today. What's going to happen? That's the question. So when we hit it, we have to be reactive. If we start to see a big hard scale pull, we start to see the indicators roll back over, we get sell volume, we get some perfectly timed news from our favorite market makers there, along with the perfect resistance time. We see that a lot. We have to look for that, because if not, we're going to be above the 2618, and we're gonna loop and push the next extension up to 431.40s and 30s, right? And then slowly continue the melt up that we've been looking for quite some time. Now, it's a hard game up here at the weekly deviations when we're playing this high up into resistance, but that is what we have to look for. So our targets are going to persist between 430 and 429.70. Okay, these three lines right here, we have huge confliction points. And then if it breaks out there and gets a little bit of a FOMO MOMO, we're going to come up to this 423.6 extension, 431. I don't see it any higher than that, especially if you get a FOMO Friday breakout. That's a lot. That's asking for a lot. So let's take a couple look at the technicals here on the daily, just so you guys are aware of where we're at on our bottom scale. We are nearing a little, you're getting that cook spot. Last time, and especially on the daily chart, when the RSI gets cooked or cooled, obviously on the 1 year, if I scroll back a little bit right here, you can see the high low. And you can see those were literally the points of interest of turnaround on the RSI. So right here, over hot, matches the highs. Here, over cool, matches that low consolidation turnaround. So the daily chart takes RSI very seriously. So when we see this, and it could go hot here, it could force up into the hot range. That would get us up past the weekly deviation into some of those extension levels where we could see a big backside test. Now, let's go back to my other default. This is for a special trend. And for a special trend, we are up and over a lot of the old trends that were stopping us. So even if we had a melt up from here, okay, a little push ski into some beautiful like 431, half deviation, and then it fails there, comes all the way down and catches some of those gaps and pushes back up on this golden trend line you see right here. That would be considered a back test of support through the next month or so, maybe into July, we'll see, and then continuing back up. Now, I don't think the FOMO rally is over quite yet. There's a lot of doom and gloom approaching here, because this big blue line is obviously that 431.73. That's a huge top. That 4173, go back to the other chart, does line up with obviously very close to all 423 extensions. Now, not dead on, but this whole rack of levels right here is a solid bit of resistance on multiple time frame Fibonacci. So we got to be very cautious with that as well. So we'll see what happens tomorrow at the 430. We have our prediction for tomorrow. We're going to wait for the 30-30 kind of catch up here. We're back over the 200. Unfortunately, the 50 is still under the 100, so we have to see what happens tonight. So I'd expect just choppy garbage. Maybe we probably won't get too much of a trade. If we reach up to 430 and hit here, probably going to pull back. I don't see a full-on squeeze out unless they really manipulate the market up and fly, which is fine. We just don't have the catalyst or the narrative to produce that kind of move. So stay tuned and we'll see what happens next.